Hello, Intermediate Accounting 2 class, 2020. Gonna get you graduated here. So, I'm just gonna summarize the pensions chapter. I did an introduction, and then you've got access to a bunch of online material, online lectures, homework. And so, what I'm gonna do is summarize this chart and how to use it to make your final 2 journal entries that you need to make at the year end. So basically, let's take a look at this chart that we learned how to fill in, and I'll summarize, I guess, a bunch of the key learning outcomes that you should take away from this chart. Okay, so what I'm showing you here is the IFRS version of the pensions calculation chart instead of the ASPE version, because the only difference is that you wouldn't have this column for ASPE because your asset remeasurement gain or loss, or actuarial gain or loss on defined benefit obligation would just simply move over into this column. So you wouldn't have this column for ASPE, it would just move in here, because this column is for our other comprehensive income, which ends up in the statement of comprehensive income, which is an income statement item. Okay, so in ASPE we don't have other comprehensive income. We just have one statement of income under ASPE. Okay, so I guess that would be like my first differentiating factor between IFRS and ASPE, just a summary of that. Okay, so the first thing we start out with in our chart is our beginning balance. Okay, and I just want you to note here that we get our journal entries from these columns, and the last 2 columns are, the textbook says that they're a memo, okay, and it keeps track of changes to the DBO and the plan assets. Okay, DBO means defined benefit obligation. So this is where we're going to get our journal entries from, because we have remeasure gain or loss, statement of comprehensive income, which is income statement, annual pension expense, income statement item, cash, which is a balance sheet item, net defined benefit obligation, which is a balance sheet item. Okay, and these go on our company's financial statements, and the pension plan itself is actually not a part of the company. So you'd have like some sort of trust set up, or a different business entity that would be holding the plan assets and keeping track of the DBO. Okay, so here we have our beginning balance, starts here, and our net defined benefit obligation is the net of our plan assets and our obligation. Okay, so I circled these 2 items and put an arrow over to net. Okay, and then the next item that I put here, and it's not in every question that you do, is past service cost. The past service cost is when there's been a decision made as to what we're going to pay our employees for when they retire. So whenever we make a change to the commitment that we're making, or the promise, then that would change what we're paying them. Okay, what we're going to pay our retirees. So that change, of course, would change our obligation or our promise. And how do you, that's a balance sheet item. Remember, I keep saying, how do you fundamentally change your balance sheet? Well, the income statement is how you fundamentally change any balance sheet item, okay? So that would be a pension expense or an income statement item. Okay, and then we have our current service cost. Okay, and that's just what we've committed to pay. No changes, just our current year service cost to current employees that we're going to owe a pension to. Okay, so that would also be an income statement item, and that would change our obligation or our promise that we're making to our retirees. Okay, just gonna erase that there. Okay, what these stars mean, so I did two things to highlight a column where you're going to put items. I put a star and then I put a solid line. And the dotted lines are just to help your eyes follow along in the columns. I guess I could have went to Staples and bought a ruler, but I didn't think of that, so I didn't. So yeah, I just put dotted lines here. Okay, so let's move on to, okay, we talked about beginning balance, past service costs, and current service costs. Now you'll notice here that I put one of these curly things that I don't know what they are, but I use them all the time. And I drew an arrow to our net interest or finance cost. The reason why I did that is because in the question you have to pay attention to whether or not you're going to have a full year of interest calculated on the past service cost or the current service cost. So the question might say that the pension was changed, there was a fundamental change to the commitment made for retirees, and that commitment was made at the beginning of the year. Well, if that's the case, then you have to calculate your interest portion based on the beginning balance plus the past service cost. And the question might also say that the current service cost was calculated at the beginning of the year as well. So then you have these three items where interest was calculated for the full year. So sometimes a question just says that interest is only calculated on the beginning balance, or past service, or it might include the past service cost at the beginning of the year, and it also might include current service costs at the beginning of the year or partway through the year. But I think most of the questions that we get are the current service cost is calculated at the end of the year, and therefore there's no finance cost associated with this one. Okay, but it might be associated with these two together. Okay, so the next thing, let's go to net interest finance cost. So what we're going to do is, based on what I just talked about, we're going to calculate what, using our interest rate, what we expect our gain is going to be, or whatever we're going to earn on our plan assets, and we're going to calculate the interest on our liability or obligation, okay, based on a rate. And I believe in when this was taught previously, there used to be two different rates, which makes sense actually if you think about it, because the rate at which you're going to calculate the cost on your liability or your commitment probably isn't the same rate as what you're going to earn on your plan assets. But there could be an argument that the rate should be the same, and so I believe that the textbook publishers and the way that people are teaching it now, they just use the same rate for calculating your cost on this obligation and what you're going to earn on the plan assets. Okay, so when you compare the cost on the obligation and what you're going to earn, you can net those two and put this into your annual pension expense column. Now, sometimes you might see in your solutions that these two items are on separate lines, and you don't have to do that. You can net them and just put it here. So if you use two different lines, then you'd have another line here. Okay, but you don't have to do that. This is another place where you can net. Oh yeah, the first place that you net on would be your defined benefit obligation and your planned assets. So you would net those two and put that net here as the net defined benefit obligation. I guess just to back up and talk a little about this balance sheet item is you could have more assets than your obligation or promise, and so this could be in a surplus position. But if you have more promises or obligations than planned assets, then that would be in a deficit position. Okay? So, alright, so let's move forward here. Our asset remeasurement gain or loss. I guess I'll talk about both of these at the same time. Asset remeasurement gain or loss, and our actuarial gain or loss on our DBO. Okay, what is this? So sometimes the problem will give you this. So if this says solve or given, so you use the same number here as you would in your memo. So this would either increase or decrease your planned assets or your DBO. Okay, what this means is that you thought you were going to make a certain amount of gain or interest on your planned assets, or you thought you were going to have to pay, or your cost on your obligation was going to be a certain amount. But then some mathematical experts called actuarials came to you and said, actually what you calculated was wrong or different. And so, yeah, different's a nicer word than wrong, isn't it? So let's use the word different. And so you would have to put that difference in here, okay? So the way that the question can be made a little bit more difficult is that they wouldn't give you this. What they would give you instead is, I just want to see what you can see. Okay, so let's see here. Oh yeah, sorry guys, just making sure that you can see what I see. So they could give you the end balances instead. So what happens is that you put all your numbers into this chart, and then you add up the beginning plus all the changes, and then you get down to the bottom and you notice that your beginning plus your changes does not equal your end balances that they gave you in the problem. Well, all you do is plug that difference in here and make it balance, because they didn't give you what the asset remeasurement gain or loss was because they wanted you to solve it. Okay? They didn't give you what the actuarial gain or loss on the defined benefit obligation was because they wanted you to solve it. Okay? So when you add up your beginning plus your changes, then you get to the bottom and it doesn't sum up to what they gave you in the problem, then you just take the difference that you're off by and plug it in to asset remeasurement gain or loss, or actuarial gain or loss on defined benefit obligation. Okay, just as I did in my introduction video, I said you've got to do contributions toward your pension plan. So your contributions is pretty straightforward. You put cash in to your planned assets, so you put the cash here, and just make a memo here that you increased your planned assets, and then you have to pay your retirees to make good on your promise, your pension promise, to pay them a certain amount when they retire. So what you do, this doesn't affect our balance sheet and income statement, okay? It affects the plan balance sheet, okay? So all we're doing when we pay our benefits, when we pay our retirees, is we're transferring cash from our plan assets to reduce our obligation. We're paying our retirees, the employees that retired. Okay? So now we're going to get to the part where we use this chart to actually make journal entries in our company. Okay, so what we would do is we would sum all of these two columns, the remeasurement gain loss, okay, sum that up and put that sum here. The annual pension expense, sum that up and put that amount here. And then you add these two together, and that would change your balance sheet. So that would change your net defined benefit obligation. So remember, I keep saying over and over, how do you fundamentally change your balance sheet? You use your income statement to change your balance sheet. So these two income statement items change your balance sheet. Okay, so that's your expense entry. Sum these two columns, add them together, changes your balance sheet, changes your net defined benefit obligation. Then your funding entry simply is the cash that you paid here, okay? And this is just a transfer of asset from one asset pool to another asset pool. So we haven't really fundamentally changed our balance sheet, have we? We've just taken cash and we increased our planned assets, okay? So that could also decrease our deficit. And then at the end, we have our defined benefit obligation, which could be in a surplus or deficit position. And all that is, like I said before, we add up all these columns. They should add up to what we were given for end balances. And like I said, the problem might not give you end balances. They might give you these instead. So then you have everything you need to sum up both columns, your defined benefit obligation, your planned assets. You net these together, and then you put the net here, and that would be your balance. So that's a summary of how to use this chart. That's a summary of how to get your journal entries from the chart. And there really isn't too many tricks on how to make this more difficult besides just either giving you these variables instead of giving you these, or vice versa. So hopefully that helps sum up this this chart and how to get your journal entries, and sums up the learning outcome for you. I'll post this video right away. Might make some edits, and then it should be uploaded hopefully before 3 o'clock this afternoon for you. Okay, thanks a lot.